One of the best ways of growing wealth is investment. Now, $1 million dollars might seem like a lot of money to spend, but given the current inflation rates every year, there's still a chance the money won't be enough, even if it was your retirement savings. And so, what's better than investing your $1 million dollars and enjoying returns for the rest of your life? With $1 million, dollars, you can start making good profits by investing in dividends. However, you must decide first if you're a low risk investor or a high risk investor. While low risk investments may be the best for first time investors, high risk investments are the most rewarding. In this video, we'll show you the best dividend investment options, whether you're a low risk or high risk investor. Ensure you stay until the end of this video, and we'll also reveal some high reward strategies that will enable you to make over 10% return on investment annually. There are several strategies when it comes to investing. However, we'll discuss 7 strategies, starting with the most common and safest ones before moving on to the riskiest and most rewarding ones. Whether you simply just want to make steady yearly returns so you can never have to work again, or you want to make some good money to fund your dream vacation and buy your dream car, you'll find the perfect strategy for you on this list. Number 1. Dividend paying stocks. Dividend investing is a form of investment in which investors are rewarded with monthly or yearly cash returns, depending on how much they invested. The returns are based on company profits, and the investors enjoy these cash payouts as long as they hold the company's stock. Not all companies pay dividends, and very few increase their dividend returns for investors. If you can invest $1 million in a company with a good track record of paying and increasing their dividends yearly, you can reap insane cash benefits for life. One of the most common passive investment funds out there is the S&P 500. Investing in this fund is equivalent to investing in the top 500 performing companies in the US. Currently, this index fund has an average dividend yield of about 1.5%. With $1 million, you'll get $15,000 a year. You'd agree that that's quite a small amount compared to your initial investment. But the advantage here is that index funds like the S&P 500 allow you to diversify your investment, so you have a reduced risk. And also, if you're willing to take a little more risk for higher rewards, you can invest in companies that have a track record of paying increasing dividends, like P&G, Coca-Cola, and Johnson & Johnson. Coca-Cola, for instance, has increased its dividend payout more than 50 times since the start of the company. And they have a current annual dividend yield of 3.0%. So if you invest $1 million now, you get at least $30,000 every year for as long as the company exists. Number 2, the Dow Jones. The Dow Jones Industrial Average is an index fund that groups together the top 30 most traded stocks in the United States of America. The Dow Jones holds many dividend aristocrats. In other words, it holds several companies that have always increased their dividends nearly every year for the past 25 years. Johnson & Johnson is one of the good examples of dividend aristocrats on the Dow Jones. The company currently has a dividend yield of around 2.8%. Let's say there are at least 20 dividend aristocrats in the Dow Jones with this yield percentage, or even more. Investing in the Dow Jones is equivalent to summing up all these dividend yields together. You'll have much better returns from your investment and a diversified, risk-free portfolio. Number 3, dividend ETFs. ETF stands for Exchange Traded Fund. These funds invest in multiple assets, making for a more diversified investment. However, since your goal is to make dividend profits, you won't just invest in any ETF. You'll only invest in ETFs that deal with dividend-paying stocks. This way, you enjoy dividends just the same way you do from index funds. Another thing you'd want to consider is investing in high dividend ETFs. A good example is the SPHD, also known as the Investco S&P 500 High Dividend Low Volatility ETF. This fund deals with the top 50 high dividend yielding stocks in the S&P 500 that have low volatility. As of August 2023, the SPHD has an annual dividend yield of around 4.2%. And also, if you invest $1 million in it, you'd get around $40,000 per year in dividends. This is not too small given that about 50% of Americans earn less than $35,000 annually. Number 4. Sector ETFs. For this kind of investing, you'll only focus on ETFs dealing in specific sectors. Some very lucrative sectors out there include real estate and consumer staples. A good example of an ETF in this category is the Vanguard Real Estate ETF, or VNQ. The VNQ deals with real estate. It mainly invests in stocks issued by REITs, or real estate investment trusts. Real estate is one of the sectors that perform well over time, especially when there's inflation like what we're currently experiencing. Investing in real estate sector ETFs like the VNQ provide an opportunity for investors to earn dividend income while gaining exposure to industries that will outperform current market conditions. Currently, the VNQ has a dividend yield of 4.5%. So, if you invested $1 million in this ETF, you would receive roughly $45,000 yearly in dividends. Now, that's not so bad for a $1 million investment. That amount can cater to your needs yearly. You can also try other high-reward sector ETFs, like those in the technology and healthcare sectors. However, if you're still not content with the 4.5% ROI, then these next high-reward options might be the best for you. But remember, the higher the reward, the higher the risk. Number 5. REITs. REITs are short for Real Estate Investment Trusts. REITs are companies that own and operate real estate properties, such as apartments and office buildings. REITs are mandated by law to share at least 90% of their profits to shareholders as dividends. This makes it a very suitable choice for dividend investors. And here's another interesting thing. You don't have to own actual real estate properties. The REITs do all that for you. All you have to do is invest in their stocks and earn regular dividend income while also waiting for stock prices to rise so you can sell your stocks. One of the most popular REITs is the Simon Property Group, or SPG. This company owns and operates shopping malls and retail spaces across Europe, North America, and Asia. As of August 2023, the SPG has a dividend yield of 6.4%. And so, if you were to invest $1 million, you'd get about $64,000 every year. That's a decent yearly return. But if you want to spend lavishly, this money will still not be enough. And so, if you're in this category, these next methods are for you. With these next high reward strategies, you can earn hundreds of thousands in cash payouts annually. Number 6. High yield dividend stocks. Investing in high yield dividend stocks can be very lucrative, but very risky too. One good example of a high-yield dividend stock is Altria Group Incorporated. The company deals in tobacco products and has a clean track record of consistently paying high-yield dividends for decades. As of August 2023, the company's dividend yield stood at 8.5%. You'd earn $850,000 in profits yearly from your $1 million investment. Now, that's some sweet profit. Another good company in this category is Energy Transfer LP, which deals in midstream oil and gas. They currently have a dividend yield of 9.6%, meaning you'll get almost $100,000 every year for life after investing $1 million. And in just 10 to 11 years, you would have already recovered your initial investment capital. One thing to remember, however, is that these high-yield investments don't have the stability that low-risk ones do. So it's advisable to invest your yearly returns in side income streams or investments. Also, remember your income is taxable, so seek advice from a financial expert. Our next and final strategy is the riskiest, but also one that can make your wildest dreams come true. Number 7. Extremely high-yield dividend stocks, over 12%. The extremely high-yield dividend stocks are those that pay you up to 12% or more of your initial investment. These rates are mouthwatering, but there's something you should know. Since these companies share most of their profits, there's little money to reinvest and grow their business. And so, the stock prices may not grow much over time, and the business faces a greater risk of going down. However, if you're willing to risk it, one very good example of a high yield stock you can try is Annalee Capital Management Incorporated. This company invests in real estate. As of August 2023, they had a massive dividend yield of 13%, meaning your $1 million investment would yield $130,000 every year for life. Surely you can see these riskier high yield investments can be quite lucrative. You could live financially free without having to worry about working a day in your life anymore.